Investors increasingly believe that the Federal Reserve will not raise interest rates this year. That's something Fox Business has been reporting since the last FOMC meeting. Nonetheless, Fed Fund futures now show a 91% probability that the Fed will hold rates steady or lower them this year. Let's bring in Flynn Zito, Capital Management co-founder Doug Flynn. Doug, that might be the biggest challenge or problem for the Fed right now, that investors don't think they're going to hike. That affects their messaging.
It does. Well, they have good cover to not hike if they want to, from falling asset prices in the market to lower oil prices, and inflation doesn't seem to really be ticking up just yet. So I think it gives them a good opportunity to pause if they'd like to do that. And I think that just might be the boost that the market needs to really actually come through, even though some of that is priced in. I'm really looking at the 10-year Treasury to be my guide on whether or not the Fed's going to raise. And that's what I'm looking at.
So what do you think the Fed does for 2019? Any increases?
If you look at the 10-year, which is on the screen right now, if that doesn't move, then we're not going to get any increases. If that moves up, the Fed can't push the longer-term rate, so they can push up short-term. They don't want an inverted yield curve. Right. So you have to really watch this. This is going to be your guide.
What's the magic number for the yield? What number are you looking at?
So if you end up in the threes, even like 3.25 or 3.40, you could probably get 1 or 2 and maybe even more Fed rate increases. So I could see a pause here. I could see them raising again at the next one. That isn't unprecedented. They've done that before, where they've skipped every other for a little while. That could possibly happen. But if we stay where we are, we're going to have no increases, and that gives the opportunity for the market, because the pricing on the market is just ridiculously low. There's a lot of opportunities there.
Pricing on the market, meaning you think asset prices, equity prices are too cheap? At this point?
They definitely are. I mean, the PE ratio on the S&P right now is in the 14s. If you take away the FANG stocks, it's like 13. There are hundreds of stocks trading, and 100 stocks trading at like 8 or 9 multiples. I mean, that's ridiculous. You just don't have the market positivity behind you. But short of that, all you need is a little bit of a boost, and you can absolutely find some great bargains here from a market perspective, from a valuation perspective, and that's what we're looking at.
I want you to listen to something the president said about the stock market yesterday.
Okay.
We had a little glitch in the stock market last month, but it's still up, I guess, around 30% from the time I got elected, and it's going to go up once we settle trade issues. And once a couple of other things happen, it's going to go up. It's got a long way to go.
Doug, little glitch. Worst December since 1931.
I appreciate the media headline. I definitely do. The way I look at it is, look, last year you're up 21%. 2 years ago, you're up 21%. Last year, you were -4 if you count dividends. I'm counting dividends, which are important. So forget that. If you closed your eyes 2 years ago and opened them today, you'd be up 17%. That's an 8% compounded return. Okay. Yes, from peak to trough, it had just on the borderline of a bear market. But we're in a non-recession bear market, and that's the mistake a lot of people are making. They're not breaking this into recessionary bear markets and non-recessionary bear markets, which are about half the time. And non-recessionary bear markets typically go down about 20%. And then they rebound. So if we don't go into a recession, which no one's really calling for, honestly, then you have the opportunity that you may have seen the lows behind you. I'm not saying we don't retest them, but all this lines up if the Fed takes it easy with the valuations. If this is a non-recessionary bear market, we have an opportunity here to see new highs this year. Now, at that point, I will tell you, if this spooked you before, you probably need to pull some money off the table at that point.
Got it. Doug Flynn, we appreciate your perspective, certainly today. A non-recessionary bear market, Cheryl.
Well, we're looking at a negative